For another perspective, we're joined by a guest who turned bullish on stocks in early March of this year, just before the market powered ahead. So what is he predicting now? Let's get to Atlanta, where we're joined by Robert Prechter. He is founder and CEO of Elliot Wave International, which tracks trader optimism and pessimism to predict market direction. And Robert, thanks so much for being with us.
Yeah, it's good to be here in the morning. I'm glad to be indoors. It's 100 degrees in here in Atlanta this afternoon.
I think for us New Yorkers here, though, we'd love 100 degrees at this point. But in any case, you just heard from Steve Leuthold. He was talking about the fact that he believes the market will rally by the end of this year to 1,100. And I'm just trying to figure out if that is actually completely different from your view, or do you hold the same?
Well, it's very similar. When we made a low on the 9th of March, we were looking for the biggest rally since the high. We've already had that, but a normal projection would take you to S&P 1,000 to 1,100, and I think that's one of the numbers he mentioned. So we're pretty much on track. But on a short-term basis, I think after 3 months coming into the 11th of June, we might have ended the first wave up. So we may be in for some correction for a while. And if everything goes ideally, which it doesn't always do, we would have a second leg up in the summer, and that would probably complete things.
Complete things, though. But I thought that you actually still see a bear market continuing until 2011 even.
Definitely. And by completing, I mean completing this counter-trend rally. We got such a compression, and not only in terms of momentum in the market in late February, early March, but also in terms of sentiment. People were so strongly negative at that time. The strongest readings we've had probably since one of the major lows in 2001 and 2002. But like some of those lows as we were coming into the late 02 low, this one's a temporary one. But it's a strong one. And I think by the time it's over, people will be quite optimistic. They'll be talking about the fact that the economy has definitely turned and we're out of the recession and all of those feelings of good news. And as you know, you have to breathe the other way from most people in order to make money in the market.
Okay, so then describe to us, Robert, then, in terms of the pullback, not just the one that you're expecting just in the short term, but how big or how deep is the real pullback going to be?
Well, that's a great question. I think the market essentially went up along with a very long-term trend in optimism, which produced a whole lot of extra credit and lending, which got us into an extreme lending situation in the mid-2000s, has been going on for decades. Congress created a whole lot of credit-pushing institutions, from the Federal Home Loan banks to Fannie Mae, Freddie Mac, Ginnie Mae, Sallie Mae. All these institutions were pushing credit on the public to the point that they were doing 80 to 85% of all mortgages. That's the kind of thing that set us up for people going overboard in the mid-2000s in the banking industry and people investing in mortgages that really they shouldn't have. That brought us to a very, very major top, in my opinion. So I think the bear market has a lot more to go. Some people think that's bad news, but as long as you're on the sidelines and safe, it's not that bad of a situation, because ultimately you're going to have the best bargains of a lifetime when this market finally does reach its final bottom.
Yeah, but Robert, do you have any percentages or levels for us, though, that you can tell us?
Well, I think the next leg down, which probably should start later this year or in 2010, should be at least along the lines of what we already saw in 2008. So it's definitely an environment that you want to avoid being invested in. And of course, the average opinion out there is to be invested in every market there is. But one thing Steve and I do disagree on is the concern about inflation. And as I've read in the papers recently, many famous people saying we're starting a bout of hyperinflation. My view is completely different. I think we've started a deflationary environment, and that's an environment when almost every traditional investment in the long run goes down.
But I've heard that argument about a deflationary environment. But is it that are you saying that you see this environment of deflation much longer than, let's say, a year and a half, 2 years from now?
Definitely. The credit has built up for so many decades. It's gotten to the point where people can't pay the interest, won't be able to pay back the principal. There are many, many IOUs out there that in the long run are going to be in trouble. And all of that is a deflationary force. Investment markets tend to price themselves relative to the money supply in the long run, and as this decline in the value of credit continues, I think we'll see a commensurate drop in the value of most investments.
Okay, and Robert, very quickly, Steve Leuthold actually felt that or sees that emerging markets are going to outperform the U.S. markets. Just quickly, what is your view on that?
Well, they've already done it in this rally so far. We're getting a turn toward optimism short term around the world. It's led to all kinds of things, rallies in the commodities, rallies in the stock market. The overseas markets had been pummeled more than the U.S. market, so that naturally they went up faster.
Okay.
This is all a normal trend as far as I'm concerned, and as long as you're on the safe side,
Robert,
you'll be fine.
thanks so much. Robert Prechter, we'll be back.